I'm James Turk. I'm a director of the Gold Money Foundation. I'm here with Ned Naylor-Leyland, who's just given a wonderful presentation at the GATA conference here in London, England. Ned, can you share with our viewers a little bit of what you were talking about this morning?
Of course, James, yeah. It's all to do with a new exchange which has just opened in China. I mean, actually, I'll just hold back on that. It's not open fully, but they are rolling it out as we speak. It's called the Pan-Asia Gold Exchange, and it's based in Kunming City in the Yunnan province, and it's part of China's 12th five-year plan, so it's absolutely a formally central government-backed project. It's very interesting that it's flown way under the radar of the gold community. I would say even actually the gold bug community, possibly due to maybe the lack of interest amongst Western media to follow up on the story, but also partly just because it's a Chinese initiative and it's being dealt with in Chinese, and unless you happen to come across the subject, you won't know anything about it. But there's been a little bit of coverage on the internet, and Andrew Maguire, who's a good friend of mine, commented on one of the two contracts that they are rolling out. But actually, one of the reasons I wanted to speak at the conference is because the market has, or rather the internet has focused on the part of the story which I think is the less interesting part of the story rather than the really important bits. So just to back up quickly, the bit that people sort of do know about is that Page are already running a 10-ounce mini contract for the domestic retail market.
10-ounce gold contract.
That's right. Now bear in mind, at the moment, your average retail Chinese investor can buy physical.
Yes.
Or he can go and set up an account with a brokerage firm and trade futures. But of course that's quite complicated. That's not a simple process. That means that narrows down the potential scale quite dramatically. And what this 10-ounce mini contract does is allow all the customers initially of the Agricultural Bank of China, which is 200 odd million Chinese customers who can potentially can buy and sell these contracts straight through their computer linked to their bank account with the Agricultural Bank of China. And clearly that is a big amount of physical. Should a small proportion of them use this facility, that's going to be a big drawdown on the physical market. But I don't think that's really where the action is, James. I think it's interesting and I think it's very important, and they'll do it in silver as well. But the real beef with Page is to do with the other contract, which is an international facing spot contract. And as you know, the spot market is where the real weight of money is in gold and silver. And when we talk about price discovery, we tend to talk a lot about COMEX and the futures market, but actually, in truth, that's a much smaller by scale component of the global gold price discovery mechanism. And the way I described it at the conference is that we've talked before about this futures market wagging the spot dog. In other words, that rather than the spot market leading to behavior in the futures market is the thing that controls.
In other words, the paper market drives the physical market rather than the way it really should be, is the physical market is the basis for which the paper market prices itself off of.
That's right. That's right. Now, I must also point out that a lot of my understanding of this now has come from Andrew Maguire, because I needed to teach. It's actually quite technical, as you know. It's not a very, very simple subject, but I think it's important to try and help gold investors to understand what is it that creates the price, and where are we going with that. And this is what I'm about to explain is genuinely changing right now, James. Is that you have, in truth, yes, the tail wags the dog, but the reason why it does that is because actually there's someone holding the tail. Someone is wiggling the dog by holding the tail. And of course, that's the banks. They're holding the tail, and they're wiggling the spot dog using the futures market, i.e. they are moving the price using the futures market. Now, that being the case, that's fine. But in truth, the really important point is that the dog itself, the spot market, the beast, the big deal, is compliant in being wiggled. In other words, it's quite happy to be wiggled because, of course, the spot market is also the banks.
Yeah.
So you've got banks, futures market, banks.
Yeah.
So, of course, the banks are very happy to allow themselves to be wiggled around by the futures market because it suits purpose. Now, that system has been a monopoly, and we've all, because we've been looking at this for so long, kind of slightly gone to sleep about that and thought, well, that's just the way it is, that's the way the price is created. We need to generate investment demand to try and impact that price discovery mechanism. But the Page exchange is going to do it for us because they are launching in Q4, and it might even be Q3, a 90-day spot rolling contract denominated in RMB for international investors, and that contract is 1-for-1 allocated. So what that means is, at the moment, you have no choice. When you buy spot gold in size, you get what you get. And what you get is unsecured creditor status with the bullion bank through the LBMA system. Now, because you have no choice, that is the way people invest in spot gold. But because this new exchange is opening, what it infers is that you're going to suddenly have a challenge to the monopoly. In other words, you're actually going to have an alternative spot contract to invest in. Mm-hmm. And given the rather better quality of it, you have title. You're not just lending money to a bullion bank, you're actually buying gold. It's fairly obvious that very quickly the people who are invested through the LBMA system are going to, or certainly at the margin a number of them, are going to want to transfer their investments from the one market to the other.
Yeah, well the two exchanges will operate separately and independently, so isn't the natural reaction at the Pan-Asian exchange price will go to a premium to the LBMA spot price for the simple reason that it's closer to physical?
Absolutely.
And as a consequence of that, more people will be attracted to the Pan-Asian exchange.
And it will just feed
because those who want physical are not going to play in the paper exchange, they're going to go into the physical
And it's
exchange.
only because, of course, they didn't have a choice. So yeah. I believe a lot of people are simply unaware of the truly dubious quality of the spot contract they have. And by dint of seeing the new one, that will help them to understand what they own at the moment and will lead to them wanting to move across from one to the other.
Now, is the Pan-Asian exchange privately owned, or is it owned by the government?
It's owned by the Chinese government, effectively, through state-owned enterprises. They own 90% of the exchange.
So they're standing behind it in terms of the integrity?
100%. Sorry, I have failed to touch on a very important point here, James. The guy who helped China get into the WTO is pushing it. You've got the Trade Ministry, the Vice President of the DRC, all the key people in Beijing are not just behind it, but they are actively trying to push it. In fact, Dr. Liu spoke at the opening ceremony, which Andrew Maguire and I were part of via video link. And he spoke passionately about the renminbi entering the world stage, because, of course, what this exchange does is not only allow you to own proper gold, but allows you to open potentially open-ended quantities of RMB without gold, if you should wish to. So in other words, they're going to help international investors to buy the renminbi contract, net it off against the COMEX contract, leaving you just with RMB. So you and I probably would want the gold, but international investors will be able to use this gold exchange to access RMB if they offset their position in dollars through the existing. And
this would be different in the sense that you actually have the RMB in China, yes, in Kunming, as opposed to the pseudo RMB facilities that are now taking place in Hong Kong.
And bear in mind, of course, those are wholly liquid as well, James. They're not really, I mean, don't get me wrong, you can buy RMB at the moment, but there are all sorts of blocks to it. And the people who block access to RMB is SAFE, which is the State Administration for Foreign Exchange in China. And the key guy behind SAFE is behind Pan-Asia Gold Exchange, and that's the way they want to roll the renminbi out into the global market.
Well, it's very interesting because if you look at Chinese policy over the past decade, every month or every quarter they're changing the restrictions that had previously been in place and opening it up, and moving China further and further into the international financial arena. And so this is a very logical step for them to be taking. And the way they've set this thing up looks like it could be quite profound in terms of what will the impact be on the metal market in the years ahead, given the fact that China is the largest gold miner in the world, one of the largest buyers of gold in the world. It should have a significant impact on the physical price of gold.
Absolutely. And to doff the cap to Mr. Maguire again, talking to him about it, the explanation is that in that environment, are you going to stay short? I don't think so. The shorts are comfortable with the situation in as much as they know that monopoly is still in place.
Yeah, the controlling both the tail as well as the body
of the dog.
But
it's really it's about the dog. But everyone focuses on the tail.
Yeah.
But it's not actually about that. It's about the dog.
Yeah.
And and I put up a slide at the conference and get a few laughs, which was I put up a rather crude sketch of a basset hound with its tongue out. And I made the point that that's the nature of the dog at the moment is, let's say, rather compliant. And then I said, future price discovery of gold, and a picture of a Rottweiler with its mouth open. Because I believe that's the situation, which is, well, and remember that Rottweilers don't have a tail either, James.
That's true.
So the idea being is that, you know, suddenly that dog will be keener on biting the person trying to wiggle its tail rather than being happy to have its tail wiggled.
Yeah, understood.
And I just think it's a really, of course, it's typical of the way the world works that this has come in under the radar because, of course, the really important things that really change things in the world always happen like that, as you know.
Yeah.
They don't happen in a telegraphed, long lead time way. What happens is something comes along which people just weren't expecting.
Yeah.
And it will change the genuine dynamics of how it works. And for that reason, I think certainly presuming that the time frame is met, and let's be clear, setting up an exchange like this from scratch is a technical exercise, and they've got really good people doing it as well.
Yeah.
So, you know, there may be a delay of a couple of weeks or a month or so here and there, but by the end of this year, we should be fully up and running, and there's going to be an 8 a.m. Beijing fix, a real gold fix.
Based on this rolling spot
yes,
contract.
and so 6 Chinese banks are going to come together to create a fix against the real gold price.
And clear gold against themselves at this Chinese fix in Kunming? Right. Is that where it's going to take place as well?
Absolutely.
Now, you're a fund manager for one of Britain's larger fund groups, Chiefhead Asset Management. So obviously you're going to have access to that market. And other institutional players will have access to that market. What about, you know, retail people? Will they have access to that market? You know, if you're dealing with a broker in the United States, or if you're dealing with a broker here in Europe or in London, are you going to also have access to that exchange?
In short, yes. And the reason why I can say that with a reasonable degree of certainty is that I'm already helping I won't say who it is, but one of the largest brokerage firms in the world to plug in with Page. Because, of course, ultimately, James, something like this is about supply and demand, isn't it? You know, if the demand is there, the brokerage firms want in because they can see the flow and they can see how the dynamics are changing. Yeah. And certainly, assuming the demand is there, they're going to set up arrangements with the exchange. There's you know, a clear demand for real gold in size that's not being met in a satisfactory way. So yes, in due course, as a retail investor, if you have if you plug it in,
global account,
that you will be able to access it in that way. I'm helping them to get in contact. I mean, the one thing about this exchange is I don't think they were probably quite as aware of how excited we would be by this. Of course, they're just going about it themselves, and they've tasked a Taiwanese company to be the international sort of facing part of the exchange, certainly initially, and to try and roll out the business and get people interested on an international basis. That's how I got involved. They asked me to sort of consult on it. Yeah. But by all accounts, everybody I speak to wants in. So, in my opinion, what will happen is we'll see an initial interest, and I actually do think it will spiral quite quickly, because given the choice, reverse Gresham's law, are you going to want to hang on to the dubious contract, or are you going to say, actually, no, I'm not going to worry about that?
You're going to go for quality.
Well, okay, so you're an LBMA owner, so you own unallocated gold in the LBMA system, which means that you are one of 90-something% of global gold owners, because, of course, in terms of scale, that's how big that market is. And we know that Mr. Christian said, didn't he, that it was 100 to 1.
At the CFTC hearing a year ago, Mark.
That's right. So let's take
paper versus physical.
Let's take it at his word and say it's 100 to 1, or 1 to 100, depending on which way you want to put it.
Yeah.
You know, given the choice between sticking with that system, where you have a partial backing and unsecured creditor status, and being fully backed, I don't think it'll take long for people to want to move across in scale.
Yeah, understood. They use the acronym PAGE, Pan Asian Gold Exchange. Is that the website, or is there some way that people can get information about what's happening, or is it not yet generated?
Yes, I have to tell you, it's a little scratchy, and this is kind of what I meant, which is that's the part of it which they probably haven't been as savvy about as they might have been.
Using the internet to get information out there about how the exchange is going to operate.
There is an English translation on their website, but let's just say it's not written by an English teacher.
Yeah, okay.
So I'm just in a slightly privileged position because I'm speaking to people actually doing it. And so I'm corroborating all the important points with them. And they seem to be very, very aware of all the key problems with the way that gold is traded at the moment. I mean, a good example is the fact that if you buy a bar or you buy gold through this new exchange, if you want to lease or swap it, you can do what you like, but you lose title. And of course, this is a key component of the price discovery mechanism at the moment, is that leasing and swapping apparently can happen with multiple owners within the chain, whereas the Chinese won't allow that. If you lease it, but you don't hang on to the title, it gets passed on. And I just think it will serve to tighten up the market in a way which we've all been waiting for a long time.
Well, I'll be looking forward to developments on Pan Asian Gold Exchange. And Ned, thank you for taking the time out to share your thoughts with us about it.
Not at all,
Sounds like
James.
an important development.
Not at all.
Thank you.
Good stuff.